In this video, I'll analyze the Q1 FY26 result and Concall of Capri Global Capital. So let's start with the company overview. So Capri is an NBFC. They mainly offer gold loans, housing loans, MSME loans, construction finance. And if I talk about their AUM composition, then 35% of their AUM comes from the gold loan segment, then 23% of their AUM comes from the MSME segment, and 23% comes from the housing loans, and then 18% comes from the construction finance. Okay, in terms of their geography, they are present in 19 states, so more or less they are fairly diversified in terms of the geography. So let's talk about the result of Capri Global in Q1 FY26. In this quarter, they grew their AUM by 42% year on year, and their AUM stands at the level of 25,000 crore. And if I talk about their, the size of loan book and the growth of loan book at a 25,000 crore level, they are growing at a decent rate of 40%. So that is a very good growth, I would say. Okay, so that is one point. And if I talk about their segment wise growth, in this quarter, gold loan grew by 69% year on year, then construction finance grew by 61%, affordable housing finance grew by 32%, and then MSME loans grew by 14%. Okay, so gold loan, if we look at their past 2 years, they have been growing their gold loan segment at a very high pace, and that is helping them to improve their NIM, improve their yield. Okay, because the yield from the gold loan segment is the highest among the 4 segments they have. So that is one point. In terms of the guidance, the management is guiding us for a 50,000 crore AUM by FY28, which translates around 30% CAGR for next 3 years. So that is the point with the AUM. So if I talk about their guidance also, that is pretty good, but I would like to grow them at a rate of 35-40%, which they are doing now, but let's see what happens. So but again, 30% growth is also very good. So that is the point. Let's see what happens in the next quarters. If I talk about their asset quality, GNPA and NNPA have been stable for last few quarters. So that is a very good thing, that they are managing their asset quality very well. So that is one point. But we know that what is happening in the MSME segment, MSME industry, if we can see what is going on in SBFC and what is going on 5-star. So that is a thing they are saying also. But the thing is that if we look at their MSME ATS, average ticket size, then it is around 20 lakhs. And if we look at the delinquencies are higher in the lower ticket size loans. Okay, like 5 lakh, 10 lakh, in those category the delinquencies are more, but as they have a higher ticket size portfolio, that is why the pain is lesser. But yeah, there is some pain in terms of the asset quality in MSME division. The management is saying that they are seeing some kind of a delinquencies in the state of Madhya Pradesh. Okay, so that is one thing. But again, I think it is more or less stable, like as we can see in the GNPA and NPA number. Okay, in terms of the guidance, the management is guiding us for a max to max 1.2% of the management is guiding us for a GNPA of 2% max to max. Okay, they are saying that GNPA will never cross 2% mark, and they are at the mark of 1.7%, and NNPA they are at 1%, and they are saying that they will never cross 1.2% of NNPA. Okay, so in terms of the guidance, that is pretty positive, that they are very confident about protecting their asset quality. In terms of in terms of the asset quality, they are pretty stable for last few quarters, and we are expecting a stable asset quality. The management is also expecting a stable asset quality going forward. In terms of the yield is now at 16.9%, the portfolio yield. And if we see at the trajectory of the portfolio yield in the quarter of Q4 FY24, the portfolio yield was at 15.6% now at a level of 16.9%. So if we look at their portfolio yield, that has been improving every quarter, mainly because of the gold loan segment. Because if we look at the gold loan segment, gold loan have a average yield of 22%. Okay, so as the gold loan segment will increase, okay, the yield will be better. So that is one point. Like the management is saying that now the gold loan constitutes around 36% of their AUM. Going forward, they will bring that mix towards 40%. So as the gold loan segment will increase, the portfolio yield will expand. So that is one point. In terms of cost of borrowings also, they are at a rate of 9.7%, and the cost of borrowing has been hovering in the range of 9.5 to 10% in last few quarters. But the management is expecting a 30 to 50 bps improvement in terms of the cost of borrowings, okay, by the end of this year. 30 to 50 bps of improvement in the cost of borrowing. And the management is also saying that they are expecting a credit rating upgrade in the month of September, and if that happen, then the management is expecting another 20 to 25 bps of improvement in terms of the cost of borrowing. So if the credit rating upgrade happens, then we can expect this cost of borrowings comes in the range of 9.3 9.4% in the later part of this year. So that is one really good thing. And obviously, if the portfolio yield increase and if the cost of borrowings decreases, obviously the spread will be higher. And also if we look at their spread, they are consistently improving their spread over last few quarters. And now the spread is at 7.2% in this quarter, and the guidance is that to maintain 7%, minimum of 7% spread in the next few quarters. So that is one point. But we can expect a better spread going forward, like 7.5, 7.6 kind of a spread we can expect. Okay. In terms of the cost to income, if we look at their last year, the last year cost to income was at the range of 60%. Okay, in the FY25. Now the management is guiding for a 50% of cost to income ratio in the year of FY26. So the management is expecting a good kind of operating leverage, because obviously the gold loan branches which they have opened in last two years, they are also going to be matured. So obviously from those branches they will get the operating leverage. The efficiency will be better in those branches going forward. So the management is expecting a very good kind of a operating leverage going forward. Like as I said, that in the FY25 the cost to income ratio was at 60%, and now they are expecting a 50% cost to income ratio in this year. So yeah, that is a very good thing. And obviously if I talk about the ROE, we can expect ROE to move in the upward direction, obviously because of the operating leverage and also the cost of borrowings. Obviously, if that cost of borrowings comes down in the coming quarters, then obviously ROE will improve. Okay, in this quarter they have registered a ROE of 13%. The ROE was lower mainly because of the equity dilution they have done in this quarter. 2000 crores of QIP they have done in this quarter, so that is why the return on equity is lower in this quarter. But yeah, we can expect a good kind of a ROE going forward. And also if we look at the management is guiding us for a 13.5 to 14% ROE in FY26, and going forward in the FY27 they are expecting a ROE of 16 to 17%. And obviously they can do it because of the operating leverage they will get, and the cost of borrowings also that will play a big role. So that is a point with the ROE. And in terms of the PAT, in this quarter they grew their PAT by 130%. Okay, mainly because of the operating leverage they had in this quarter. Because if we look at their cost to income, as I said, that is what have driven the PAT in this quarter. So that is the point, and we can expect a similar kind of a growth going forward also, because if we look at their cost of income in the last year, that was pretty high, and as the cost of income will decrease, obviously we can expect a better PAT in the coming quarters. So that is one point with the PAT. In terms of the expansion plan, they have been very consistently expanding, and they are expanding at a very good rate if we look at their expansion rate. And also the management is saying that they will continue the expansion. In this year they are going to open around 200 branches, okay, in an overall basis, and they will open another 100 branch in the gold loan segment. Okay, so obviously the management is very positive in terms of the expansion, and they have been doing really good in terms of the branch expansion. And the management is saying that they will explore new geographies more in the South India, like Tamil Nadu, Odisha. Okay, so that is another point with the expansion. And obviously the expansion has been very good over last few years. So in terms of the expansion, that is pretty good. And if I talk about the overall again a good set of numbers. If we can see their last few quarters also, they are doing really good in terms of the growth, in terms of the operating leverage, in terms of the expansion in ROE. All have been very good. So overall it is a very good set of number. So that is the thing, and they have been doing very well, okay, in the last few quarters. And let's see what happens in the next few quarters. So as of now they are doing very good. I think Capri Global is one of the best NBFCs in this country. So that is the point. In terms of valuation, I would say they are trading at a fair valuation. So I would not say anything about buy and sell, but yeah, they are trading at a fair valuation. And obviously the business is doing very good. Even if it is trading at a higher PB ratio or trading at a higher level, I would say you can go for Capri Global because of the business they are doing really good in terms of growth, in terms of operating leverage, all are very good. So that is the point with Capri Global. So that's it for the video. Thanks for watching.